If you are a business owner, you gotta start using a tax strategy of hiring your kids to work in your business. This is one of the best, easiest, and lucrative tax strategies. Basically, you're shifting income from your high tax bracket to your children's zero or very low tax bracket. Now, in this video, we're gonna talk about hiring your child from different entities that you might have, whether it's a sole proprietorship or an S corporation, which has some different rules and regulations about how to do this, but still to be able to maximize your deduction as a tax strategy. We will also talk about what to do next. After this YouTube video, you will be equipped with information how to start implementing this tax strategy right away. Ready? Let's get going. Hey, welcome to my whiteboard tax strategy. My name is Boris Musheyev. I'm a CPA and a certified tax strategist. Every Tuesday, I release a tax strategy video here on YouTube for you, the business owner. By watching this video, my goal is for you to start paying less in taxes right away. So go ahead, subscribe to my channel, like it, share it, and even comment below. I appreciate you. Now let's get started. Let's get started with this tax strategy. So as always, I've broken it out to you in 3 simple steps because I like using whiteboard, and this is a whiteboard tax strategy. So we're gonna talk about why, the strategy, and really what to do next. So definitely make sure you stay till the end to know what you need to do next properly to execute this tax strategy. Before we talk about why, I wanna talk about this tax strategy in terms of like how it really works. Now, here's the thing. Anybody in America, I don't care who you are, anybody in America, a child or an adult, the federal IRS code, the tax code says that if you make up to $13,850, and these numbers are for 2023, if you make up to $13,850, you pay no income tax, okay? First of all, you need to understand this because this is how this tax strategy comes into play. That means your children who probably don't have other jobs, because they're in school or whatever that may be, they don't have any other income. So any income that you pay them from your business up to $13,850, that child, or if you have more than one, those children will not pay any income tax on this amount, and you, as a business owner, will receive a tax deduction. So this is really an income shifting tax strategy. You're shifting income from yourself to your children. But not only are they not paying any income tax, ladies and gentlemen, what really becomes very interesting is that IRS says, hold on a second, it's the parent employing a child. In that case, there's no payroll taxes. Wow, right? Think about that. Usually, anybody that's in America works and makes $13,850 or up to $13,850, they don't pay any income tax, but they do pay the second tax, which is the payroll tax, the FICA taxes, which we all know, which is the Social Security and Medicare. But the IRS code says if it's your child, forget it. You don't have to pay that FICA tax, nor does your child. Boom, mind-blowing, right? It's a great tax strategy. So basically, it's $13,850 write-off from your business. Your child doesn't pay any income taxes. And most importantly, this $13,850 reduces your taxable income. If you got two children, that is $27,700 deduction, and if you are successful business owner, I'm guessing, right? Then you're probably in a 30% bracket. You're going to save $8,310 right off the bat without really giving your money away to somebody else. It's to your children, right? Same family, but guess how much money you're saving on taxes. That is really why you should be using this tax strategy. Now, it does get a little bit detailed, and I'm going to break it down for you in a simple to understand language, I promise. Now, what happens is that there's different treatments of when you are a sole proprietor. I wrote sole prom. I have no idea why I wrote that. I did not just come back from prom, okay? But anyways, sole proprietor or an LLC, single member LLC, or a parent partnership. I should really write here parent, okay? If it's a partnership with another person, it's different treatment, but we're assuming a parent partnership. Then it's treated differently if you are an S corporation or a C corporation. We're going to dive deep into this so you can understand this right after this break. Hey, Boris Musheyev here. Sorry for the quick interruption. 5 seconds, I promise. I want to make sure you get your free PDF, 7 write-offs every S corporation business owner must know. The link to this free PDF is in the description below. That's it. Thank you so much. Continue watching. Cool. Welcome back. Now, let's talk about different treatments of using this tax strategy of hiring your children if you have a sole proprietor and you have an S corporation. Now, what is really a sole proprietor? I'm not going to spend too much time on this, but it's basically when you have your own business and you're operating under your own name or a DBA, you don't have an LLC per se, or you don't have a corporation. Now, if you do have an LLC and you are a single member LLC, single owner LLC, for tax purposes, you are considered as a sole proprietor. Now, here's the rule. IRS says that when you pay your children, your child does not have to pay taxes up to $13,850. We have covered that. There's also no payroll taxes, but IRS makes a stipulation. The only reason you don't pay the payroll taxes of 15.3%, right? The reason is because you are a parent. So when you run a sole proprietorship business, you are a parent running this business. IRS says, you know what? No payroll taxes. Don't worry about it. You're good to go. When you become an entity, such an LLC, because for tax purposes, IRS treats LLC as a sole proprietorship. IRS says, you know what? I'll close my ears, I'll close my eyes, I'll shut my mouth, and I'll still let you take this deduction and not pay any payroll taxes. And then you choose to be partner with your other spouse. And IRS says, I shut my ears, I close my eyes, and I shut my mouth. No payroll taxes. You are considered as a parent, whether you are a single member LLC or a partnership, which is parent partnership. Easy peasy, super, super awesome strategy. Now, majority of business owners are S corporations, okay? Not even C, but for this purposes, S and a C are the same. IRS says, hold on a second. Now you're playing a whole different game. You are a corporation. You are no longer considered a parent. And because you are no longer considered a parent, you have to pay payroll taxes. Don't get me wrong. When you pay your child $13,850, you're going to get a deduction. Your child, not going to pay any income tax on it, but your child will pay a payroll tax. Now, as you know, when you issue somebody a paycheck in your business, as you know, you pay payroll taxes, which is the Medicare and the Social Security tax of 7.65%. That person pays 7.65%. Same rule would apply to your children. So now you might say, well, Boris, then this strategy is not as lucrative for me then. Almost. You're not completely correct when you say that. Why? Let's say you are in a 30% bracket, profitable business, money coming in, you got to pay taxes, but you got to use tax strategies with your tax advisor, right? So what are you going to end up doing is that even though you pay your children from an S corporation and you still end up paying the payroll taxes, well, guess what? 30% minus 15% over here, you're still saving 15% on taxes. So in our example, instead of saving $8,310, if you employ your children from an S corporation and pay payroll taxes, you'll end up saving about $4,000. Still savings. Now, is there a workaround? Boris, is there a workaround? This is IRS tax code we're talking about. Can I still have an S corporation and not pay any payroll taxes? The answer is yes. Not going to get into too much detail on this video because a lot of people tend to misuse this information, abuse it, and get into trouble with IRS. But there is a workaround. The workaround is creating a family management company. A family management company basically is created by one of the parents, which then becomes a sole proprietor. The IRS says now, oh, wow, you are now a family management company. You're a sole proprietor. You're back to being a parent. And the family management company provides services to your main business. The main business pays the family management company, and the family management company pays your children. Is this strategy so simple to set up? Not as simple, and should be done within a advice of your tax advisor. Rules and regulations have to be followed, and you have to be in compliance. I'm not saying that it cannot be done. Don't get me wrong, it can be. But a lot of people watch reels and watch shorts and watch some YouTube videos and they start spitting out all this information. But no. You gotta work with your tax advisor to get this done. Now, I always say, if you have a profitable business, I can guarantee you're overpaying in taxes. And stop working with your tax preparer. If you're a profitable business, you need somebody who can help you save on taxes. Now, what to do next, how to really implement this tax strategy, start saving money on taxes? will be right after the break and we'll talk about it. Hey, thank you so much for watching the video. Very quickly, if you don't mind, I want to ask for your help. I need your help. I want other business owners just like you that will benefit from a video like this to catch this video. The best thing that you can do for me, please either like the video or even say something in the comments, because that really helps the YouTube algorithm when it sees a lot of engagement to push the video to other business owners just like yourself, or better yet, subscribe to the channel would be much appreciated. Thank you again. Now let's get back to the tax strategy. All right, awesome. Let's talk about what to do next, how to start using this tax strategy today properly, okay? Properly, but hey, you gotta work with a tax advisor to do this, but if you wanna take your chances, let's give it a shot. All right, number one, before paying your children, you've gotta pay your children a reasonable compensation. You can hire a child to help you do paper shredding for $50 an hour in your office. It's just not how it works. IRS does not like when people abuse a tax strategy. So what we wanna do is pay your child a reasonable compensation. By the way, I've put together a list of things that your child can do, completely free PDF download in the description below. You pay your child for whatever it is. So now you might say, well, Boris, my child comes in and does this for me. Well, look up online how much somebody like that would get paid and pay your children based on that. Keep timesheets. Documentation is super important. IRS wants to know, is this legitimate? Now you can say, of course it's legitimate, but you have nothing to back it up. That may be a problem. So timesheets. In my office, my children, they sign their timesheets, okay? They sign their timesheets. I pay them a reasonable compensation. Now you might say, well, Boris, what can be a reasonable compensation? I'm not really sure. Well, you can at least pay them the minimum wage in your state, okay? Keep timesheets. Now remember, your business, the way it would work is that your business would pay your child directly. Okay? Now, your child does need a bank account. It cannot be going to parents' bank account, okay? Your child does need a bank account. In a case where you have a management company set up, like we spoke about here in the video, your business would pay the management company, and then the management company will pay your child's account. But again, you've got to work with a tax advisor if you want to start getting the family management company involved, which is, again, a great strategy, but you should not be doing it on your own. Now, the business pays, the child must have a bank account, okay? Do not do lump sum payments. What I've seen happen is that people watch a video on YouTube about hiring children, and that's really the main reason I'm doing it, is that when they watch it, they watch the video, and at the end of the year, they just write out a check, $12,000 or $13,000, $850,000 transfer to the child, take a deduction. No, cannot be done, should not be done, because it probably doesn't have any documentation. You can't substantiate it, the reasonable compensation, the timesheets, the documentation. The whole thing just looks wrong, and it will be an add back, and it will be challenged by the IRS, especially when you got 2 or 3 children. Writing them $40,000 check, lump sum, don't do it. Instead, what you need to do is pay them on a frequency of your payroll. So especially if you have other employees working for you. So what do you need to do? If you pay your employees on a bi-weekly basis, you pay your children on a bi-weekly basis, okay? Super, super important. Look, like I said, this tax strategy can really save you a lot of money on taxes. You just need to do it, and you just need to implement it. Work with a tax advisor to make sure your strategies are implemented. I personally do not believe that a business owner should be implementing all of the strategies on their own. You've got to run your business. You've got to work with a tax advisor to help you implement these tax strategies. If you are interested in a free tax advisory session, there's going to be a link below this video in the description, also in the comment section below. It's a completely free tax advisory session to see if it would be a good fit. Thank you so much for watching, and until the next time.